people are scared of it. People are really scared that AI is going to take our jobs. But it's not. It's really not. It's going to enhance our jobs. And I think that the more we lean into it, the better it will be for everybody. We've met with lots of different people that think that underwriting and everything is going to be gone because of AI. I really don't believe that is the case. I just think it's massively prevalent at the moment. We need to run with it, and that's why we are doing what we need to do, because it's there. SEO, all of that will be gone.
Welcome to the Property Funder podcast. We've got Ellen and Beth from Medianett here. They're locked and loaded, ready to go. So we're going to have some fun. First of all, congrats on the FP show. I thought that was absolute masterful. Enjoyed it thoroughly. Probably the busiest room I've seen it. So
yeah, it was. Yeah, we had a 22% uplift in registrations and people attending, which was awesome.
Yeah, that's pretty cool. I guess you guys worked your butts off to get it there.
Yeah, some sleepless nights. Yeah.
I sort of feel like that venue now is working really well. I don't know how you feel, but like the old hall, I feel it feels like a distant memory. I feel like now you're in your home.
We're in it, and also we have room to expand. So we've expanded the last 2 years, each time by another set amount of square foot. So next year will be even more so because we sold out so quickly with stands. So it's getting bigger and bigger until we're pretty much close to capacity after we do this latest expansion for next year. And then, we'll see how it takes us.
No, really. That's awesome. First of all, I have an apology, Beth. I was hoping that I would have stumbled upon some vintage Playboy magazines by now for you, but it didn't quite play out.
And so we're bringing cocktails over and no Playboys.
Yeah. You bring the cocktails and I bring no porn. Yeah.
Damn, I'm leaving.
Oh, what a boring Monday.
Vintage porn. Yeah, what a boring Monday. I sort of feel like this is this Monday and next Monday, there's sort of two acceptable Mondays of the year to be drinking. Is that fair?
I think so.
Yeah.
I think, by the way, I'm not drinking Iron Brew as much as I like Iron Brew. This is actually what is it, Ciroc and something?
Yeah, I don't know what one you chose.
Ciroc. By the way, did you watch the Diddy documentary?
Oh, yes.
Well, that's Diddy vodka.
It is.
I'll have another one, please.
Beverly Fisher, cancelled.
Oh, this has really become an interesting Monday. What else have we got over there? I'll drink out the can.
Well, as far as our audience know, we're recording this in January 2026. So yeah, it's actually Iron Brew. So
it's Iron Brew.
It's a Barocca.
Oh yeah, I'm really hungover from all the parties in the beginning of Jan.
New Year. New Year's.
Yeah, Happy New Year.
So, as you drink your Diddy vodka, tell us about the plans for Medianett's plans for 2026. What are you guys excited about?
Where do we start? Really, there's a lot going on next year.
This year.
Sorry, there's a lot going on this year. We have obviously the normal with our awards, which we will be releasing this month.
Excellent.
And obviously the FP show again next year. But we're doing a huge rebrand ourselves, kind of mixing things up a little bit.
Yeah.
We needed a fresh page for where we are kind of leaving off for next year. So we're moving into that premium partner space, which Beth will obviously go into, I think, now a little bit.
Yeah.
Yeah. What does that mean?
Basically, what we found is last year was a bit of a epiphany during the beginning of summer. So it was June, July time.
Yeah.
And we went on a week run of meetings. So we did 35 meetings in 1 week, which was...
They asked for an itinerary, so I gave them an itinerary.
Yeah, Ellen did well with the itinerary. It was the kind of itinerary I like. It was packed, no time for rest, but it was great. So we saw 35 of our key clients. What we found during that time, actually it was on the first day where we're like, we need to rethink some things. What we found was we have around 220 clients overall. It's been growing year on year.
But it's pretty much every specialist lender that's out there, right?
Every specialist lender. And then also, you've got your packages that want to do bits with us. You've got lawyers, you've got valuers, you've got a whole mix, but generally majority of it is our lenders. And we found, so that's everything, events and whatnot, and marketing. We have around 90 to 100 marketing clients that do other bits with us, events, but they also do a lot of the marketing. We can't, unless we grow triple the size of our team, which we don't really have the interest in doing because we're such a boutique company. We like knowing what everyone's doing and love knowing the industry inside out. And once you scale up to that size, it's quite difficult. As I know a lot of lenders know, it's difficult to maintain service levels once you've grown to a certain level. And we like being that boutique publisher. So we were looking at it, we were just thinking, like, how do we make it work for the loyal clients that have been with us for a long time and people who get what we do and we get what they do? So we thought, we're just going to halve our client base. So we've halved our 90 marketing clients and we've halved them. So we're only dealing with a limited number of people that we've invited and had meetings with and talked to and said, like, this is what we're doing. This is the plan for next year. You'll have less competition from other lenders because we're only working with you guys. And we are going to give you that premium service, which you expect from us. And even though we've been doing it, it's just been a lot of time for us to be able to manage that amount because we get new lenders call us every week. All the time. Oh, we want to market with you, want to do this. And it's great. You can sell an advert, you can sell sponsorship here and there, but that's not how we work. We like to work with the team, like know them inside out, know exactly what they want to do, know exactly what we do. So it's just an easier conversation. It's also something where we can actually give value because when people are, booking the odd ads or they don't really understand marketing, it's really difficult to have those conversations. It's not saying that we've been like shut off to new business. We have a couple of new clients on the premium partner because they understand from the get-go. Obviously, they're not new to marketing. They're not new to the industry. They've been in, different industries, different guises before. But we just thought this is the best way for us to give space. And also this is the first time ever that by July, August, we'd actually run out of email space for the whole year, which is crazy. And we want to be
like Solus emails.
Yeah, Solus emails and banner space. I mean, they're always booked up anyway, but Solus emails, they have no availability. So people come to us, so we want an extra email. And these are, clients that have worked with us for years. And we should be able to say, we can fit you in. So it kind of does a bit of both where we get a bit more flexibility and more time to give that value add, but also the clients that we work with know that we're really just, we're working with them one-to-one. We don't want to be just selling ads. That's not what we do. We're not admin. We're not selling.
And that's a problem.
spots.
Like we have basically been glorified admin for a lot of the year, and that's not what we do. We are creative minds. We see everything. We hear everything. We are everywhere, and so we need to be bringing that in and helping and having those conversations and having the time to do that, which next year we will have. We'll be able to spend way more time, understand everybody's goals and what they want to do and where they want to be, and be able to give our own creative input and basically be an expansion of people's teams instead of just being, on the end of a phone and just booking something in for the sake of booking something in, which is not what we want.
So I get completely the business logic behind it. I think it makes a lot of sense because essentially it's kind of that Pareto principle, right? You get 80% of your revenue from 20% of your client of your client base essentially. And so you're like, okay, well, by spending so much time and effort on the sort of, the 80% who aren't really generating that much revenue for you, that creates an opportunity cost, right? Because your resource is limited essentially in terms of people, that sort of thing. Are there, is it a bit of a double-edged sword though? What were the things you were concerned about, like when you came up with this strategy? What were the things you were worried about? And how have you got comfortable with them?
Yeah, I mean, it was even just saying it is quite a ballsy move.
Yeah,
it is a ballsy move. So when we went into those meetings that week and we explained that this is the direction of where we want to go and this is what it would cost, it's a minimum spend, and then there's a retainer package if that's how clients want to work with us. There was that kind of initial, what are they going to say? But that week, we went to our top 35 and they all said yes. And it was a resounding yes. And we were to us, it just felt like they get what we do, get what we deliver, and we get them. So all those kind of initial thoughts of, oh, it's a bit of a bold statement, and also we're turning down money because we're still getting it to this day. People don't really know what we're doing next year, and they're asking, oh, can we book in some mag ads? Can we do this? And we're having to say, sorry, no, this is the new model. So it is a bold statement in the market, but we think we offer such a different product and service in the market, and we stand by it, and our clients stand by it as well.
From a, kind of putting your journalistic hat on, Beth, and I know you're not necessarily writing a copy these days, but from a journalistic perspective, was there a concern from your part around the audience, which is predominantly brokers? If you're reporting on a narrower pool of lenders, shall we say, is there a kind of, are you limiting the amount of the amount of stories that you can write about and the, I suppose, the information and education that is available to
I'm really pleased that you asked this question because...
And by the way, I'm only asking it because it's a devil's advocate.
No, we like this question.
This is a good question because I spoke it through with another client recently. So we report, our editorial team's completely independent. So they will run the editorial based on their editorial perspective, what they think is newsworthy, based on, traffic we get to our site, based on what brokers want. They're constantly talking to brokers. We write what they want, basically, they want to hear about. So it doesn't matter who's a client of ours, so to speak, we'll always be full market. And we actually it was recently with a client asking us, what editorials included, because other publishers give certain editorial and they do this, and I was like, no, that's not how it works. You're paying for marketing, you're paying for a service, paying for our events. Our editorial team you can speak to whenever you want for, we've got a story, we've got this, but it's up to them to choose. So it doesn't affect it at all. If anything, it's probably going to drive even more people wanting to talk to us because we're limited to who we're marketing. So it's gonna actually probably make it wider, and we're gonna have even more news. But it just means that we can work side by side with our premium clients and give them more of an insight into what works, what doesn't work. Like, we do a Medianett Unwrapped, so to speak, every year, and it shows, top stories, top advert campaigns. It gives you all of that kind of insider information that helps you kind of plan your year ahead.
So from a kind of audience perspective, you're still very much adding value basically to the audience.
News is news, right? So we will release what we know is relevant and what people want to hear. It doesn't matter who it is or where it's come from. We will always give the exclusives, the best news that is relevant to the industry, whether you are a premium partner or not. Really doesn't matter. Premium partnership is purely marketing, not news, not editorial.
But the good thing about it is because we're going to be an extension of all of our premium partners' teams, we'll be catching up very regularly, coming into their offices, sitting down with their teams. So we'll know when they've got news coming up. We'll know when things, who the go-to expertise, people who we can go to for certain commentary. So that helps on that side because we'll have that constant interaction, whereas with non-premium partners, we won't. It'll be more kind of them, it'll be more reactive. So they'll be coming to us with stories. So there's a mix there. But definitely not a smaller pool. It won't be limited.
Not at all.
But from your perspective, Ellen, obviously someone who's on the account side, is that how's it going to change your kind of day to day? Presumably less kind of, like you said, less admin. But does it mean give you more time for kind of building and deepening relationships?
Absolutely. So that was part of the whole point as well, is that we would be able to take the time and go and sit with clients in their offices, spend a longer period of time understanding, speaking to way more people within their industry. Because at the moment, we just speak to maybe one or two people. We want to be speaking to everyone, getting the news, being on the ground, and then reporting back to our journalists and our reporters and saying, right, these are stories, this is where we want to kind of direct information. So for me, it works because there's less people for me to actually go and actually have those deeper conversations with. We obviously still go to broker events. We want to hold more broker events as well. That's something else that we want to do next year. So we're constantly having those conversations, but it's not limiting at all. If anything, it's enhancing what I can bring for all the clients.
Ellen joined us in April and was quickly promoted to premium accounts manager because that is what she does. Like she deals.
I'm amazing.
She's amazing. She's not joking.
No one has any doubt about that.
But no, she will go out to every client of ours and make sure that they're happy with the services we provide, make sure that there's opportunities they're not missing, looking at things that they've booked. Can they optimize that even more? Can we do other things together? And that's not about selling more because we've already agreed up front for the whole year what we're doing. So it's more just about
service.
I want it to make it work 100% for you. And I want it to work better than you even thought it would work. So that's what Ellen's coming in to do. I'm obviously always here as well. I'm always picking up my mobile whenever anyone needs it. And also we'll be coming along to the majority of these meetings with Ellen as well. So giving our expertise on marketing and editorial as well.
Do you think have you identified any sort of gaps in your offering, and does this now give you the opportunity to sort of fill in any of the gaps that that you feel exist in terms of like kind of branding, marketing opportunities?
Yeah, I think we're always looking for new opportunities and new things for people to sponsor or different directions to move things across. But it does. It definitely frees us to up time for that thinking space, which we don't get. I mean, we obviously come to London a lot together, but it's cram-packed. You know, we don't have much time, just me and Beth, to talk. So it's quite nice to actually have this time now and go, okay, right, let's debrief, let's come up with other ideas. And we get all this information from lenders, we get it from brokers, valuers, whoever it may be. So yeah, we're always coming up with new ideas, and I think that's what. There is definitely different things out there that we've not tried before.
It's good campaign ideas. Like, we're really creative. So we come up with we were in a meeting actually just before this and they didn't know, it was a lender and they didn't know what type of campaign to go with for next year to kick off the year. And we literally just after half an hour talking about what they're doing, what they want to do, we came up with a slogan for them, came up with a whole idea for them. That's not necessarily our job, but we love coming up with creative ideas and new ways to stand out. So there's things like that which we now can do much more of, whereas before it was very ad hoc. It was if they needed it, whereas now I actually want to be part of that, like getting really involved.
Yeah, I do love that kind of this concept of becoming much more part of teams, basically. Yeah, I think it's a very nice. It's certainly a nice idea. I guess you have to put it into practice, right?
Of course.
But I guess that the onus is on you guys to kind of add the value, right? So that's where you're at. Obviously, events are a huge part of the revenue portion of your business. Yeah. You've got two massive events, obviously, with the awards and then the FP show. Is there a temptation now that you've got a little bit more capacity to maybe throw in an event in the first third of the year?
So we won't be next year, but we already have something huge lined up for 2027. So we are launching a very large event. It'll be larger than the FP show. And that's something which we're already planning. But we don't want to rush into it. So we don't want it to be just, here it is and hope for the best. We want it to be perfect. Just like the FP show, just like the awards. So that's something massive that we're planning.
And that's something that, it's a brainchild of Beth's and she's wanted to do it for a while. And I think that it's great. It's going to be really exciting. But I think that with the awards specifically and also the FP show, we don't want to overkill. We like to keep it so that they are the BNC awards. They're an exclusive event, right? We wouldn't want to do another one because there's absolutely no need for it. No. We put absolutely our hearts and souls into that event, along with the FP show. This third event will be completely different, which is why we feel like we can do it. But yeah, we wouldn't do anything just for the sake of doing it. It would have to be really thought out, which is why we're only launching it in 2027.
Yeah. Okay. Yeah. Well, which makes perfect sense because otherwise it's probably going to be rushed and you get
it can't be.
You get one shot at making a first impression, right, at the event, and we've seen your competitors do awards events. And
what's a competitor?
Well, Well, you are, yeah, mic drop, yeah. Well, obviously you are peerless, Ellen, but you know the reality is, obviously there are other people that operate in your space, of course. We've seen others try to do awards events with, let's just say, not much success. Yeah. And the point was like that, you know, they were kind of very much pay to play, and then, you know, and pay to play, and then also just took the guests for granted, right? And didn't offer loads of value, and you know, they didn't get repeated. So I guess as far as you guys are concerned, it's really important that if you can have a new event, you got to hype it to the max.
Yep, it's got to be of the same caliber.
And it's got to be really high quality,
or even
right?
more, yeah.
100%.
It's hard because we set ourselves such a high standard every year that we're like, oh, we really like blew out the park this year.
Yeah.
We've got to do even better than that next year. Every year we have that same, and it is a problem because we're like, oh, we've got to be even stronger.
Yeah.
It's got to be even more innovative, more exciting. But we feed off that. That's what we're about.
Yeah,
so
it's true.
We would never want to, you know, like, we get it all the time. Brokers say to us, oh, you could make this event, you know, 1,200 people, 1,500 people. I was like, yeah, we could. But I like the idea of it being, it's the same with us being a small business. I like it being an exclusive event where the best of the best in the industry are there. And it's not a mainstream awards event.
No.
It's very specialist, and we had the same conversations with people recently about, you know, who reads our publications, who are our subscribers. You know, we're not the largest database out there, but then we are the specialist database that's out there, and that's who, you know, volume isn't the most important avenue to go down in this in marketing. No. It's always about who the most important people you want to be facing. So that's how we differentiate ourselves, and that's how we will continue to differentiate ourselves.
We're extremely detail orientated. We don't just do anything and don't rush a job. Everything, even down to our database, making sure that it's super clean, knowing that everything there is actually active and using it, and it's not just there because we've got a subscriber from whenever when. We don't work like that.
Do you, I mean, this is going to sound like a boring question, but do you clean up your database like
regularly?
Absolutely.
Yeah.
Absolutely.
It's
have to.
Always constantly being cleaned. So yeah, that's really important to us because we have as far as I'm aware, the highest click and open rate in the market for our database.
As in for trade press or for the specialist or property finance world?
So yeah, for specialists in property finance in the B2B space, we have really strong engagement across clicks and opens, and that's because we're not throwing it at everyone. We could do, got a large database out there, but we clean it very regularly, and that's what we think is the most important. It's going to the right people who are engaged and want to receive your message, not just anyone.
Are there any trade press peers in other adjacent sectors that have got some interesting channels or social channels or marketing things that they do, which you look at and you think something you'd be interested in emulating? I mean, I looked at City AM have got some interesting kind of reaction pieces and social pieces that they put out. Are there any things that you're kind of looking at on the social side and you're going, yeah, we actually quite like to add that as an option, for example?
Yeah, I mean, I haven't seen it so much on the social side. It tends to be other brands in very different markets. That's where we tend to kind of get inspiration from. Go, I really like what they're doing. I think that's really engaging. So probably more on that, on a wider scale. Adverts, for example, where we get kind of campaign ideas. We're looking at like lifestyle magazines, not trade press magazines. We're looking at
hardly surprising, Beth, given your aesthetic.
Exactly.
She's constantly throwing Vogue at us and everything.
Just
She's
like,
going,
guys,
guys, look at this, read this.
And Ellen's like, have you met our clients?
Sometimes when we're like, you guys should be like Valentina, and they're like, oh, we're not.
They're like, what?
What Dave from Wigan isn't like Valentina? Yeah.
Shock. Like, but we can make it work. So it normally comes from outside the market, which I actually think most marketing teams within lenders should also be looking at and aspiring at different areas, because it all works in the same way. It's all getting a message across, but it's doing it in a more eye-catching and also, engaging way where you're not just talking about products, because everyone's very similar to an extent. And it's like, what do you actually stand for as a business, and get that message across in something that's in a really unique way. So a lot of the lifestyle brands and more kind of consumer focused marketing tends to do that. So we try and bring that in, give kind of ideas that way. But yeah, some of the national titles I really admire, and really like how their websites function. I really like their live coverage. We do that on Buy-to-Let Insider. We are going through a huge rebrand of B&C. B&C, DFT and Buy-to-Let, we're all bringing all of our websites in line with our print B&C magazine, which, as you know, is very beautiful. It looks, it's a coffee table magazine. We're bringing that look to our websites. It's definitely something which we have had on the back burner for a while. And then this summer, we actually kicked it off with our web developers, and that's going live in April.
Well, we're having seen some of the banner ads, and let's just say the pretty shoddy efforts by some of the marketing teams at some of our peers. Which is not to throw shade on them, but I'm just saying that, are you going to enforce brand, effectively visual standards on these guys, on some of these guys? Because, I mean, Ellen, I'm going to throw this question to you. Like, you've been in the specialist finance industry only 9 months, okay? Would you say, how would you compare property and specialist finance marketing compared to other industries?
Yeah. No, you are right.
Would the word afterthought be a bit of something that comes to your mind?
It would, and I think that wouldn't be a surprise to people, clients I've spoken to. I think that also delves into a lot of the conversations that I've been having already about people that have wanted to take a banner spot or wanted to take a solar spot, and we're saying, that's fine, but you've had that same banner for 12 months and it hasn't changed. So
just 12.
For example, exactly. But we need to be able to freshen it up and keep it new. And I think the beauty of our new website is that the banners aren't just going to be staying still. I think part of this is that they are actually going to be revolving. So there's going to be your banner will kind of light up on the screen, if that makes sense, every time it comes up. So yes, you do need to have input and change the banners. We try and tell people to do this at the moment, but because we aren't able to give all our time over, it's very, very difficult. Whereas now we'll be able to sit down regularly and say, right, your banner's been up for 3 months, change it. And we can come up with ideas together. And that's the whole point. We could go, right, you did this throughout the year, or we did this editorial piece, and you're actually pulling, and you want to do this on a product launch, whatever it may be. We'll come up together, we'll come up with ideas, we'll speak to designers, and we'll make sure that those are changed. But yes, it will. There is going to be, as I say, a certain caliber for our website moving forward, because we don't want it to be stale as well. We want it to be constantly evolving, and we want to make sure that the clients get the best out of what they've got with us.
And the biggest change is that we, at the moment, we've got about 10 banner ads on B&C. It's just, it's pretty chaotic, how much we've got on there. We're limiting it, like we're doing with cutting our clients down. We're limiting it to 4 adverts, and they're rotating every 10 seconds.
I think that's, speaking personally, I think that's the right thing to do.
Yeah.
I can understand, like in the past, there was motivation, obviously, to, it's almost like you're selling kind of, it's like real estate. You're selling, but actually, as you kind of move into more of as a premium product, you've got to offer a premium service. You can't offer like something that's just like basically would give me a migraine looking at it for too long.
It has to, and it's been that way because there's so much demand. But the way that we're changing it is that you still get a premium spot on the website, but you're sharing it with other digital banner clients, but it's making sure that you're also not turning into furniture on the website as well, because it's being rotated constantly. So
when you say furniture, what do you mean by that? Is that?
Well, when you don't update your banner on the homepage, for example, for 2 months, let's say, it becomes, when a reader's coming on every day to read our stories, it becomes part of the website. Like you don't even notice it.
So it doesn't trigger.
Yeah. So you need it to be. That's why we've always recommended changing it at least every 4 to 6 weeks, preferably every 4, or giving us like a rotation of banners for us to use, so we can do it for you. Whereas this new way, it means that even if you don't update it every 6 weeks, let's say, doesn't feel part of the furniture anymore, because it's constantly feels like a new homepage of banners. So that's going to be a big change, and that's going to be across all of our websites. And it means that clients can also have flexibility, whereas before they'd be like, I want a banner on this side and then one on this side, whereas now we're for our retainer clients anyway, they can kind of pick and choose between all three of our websites. It's easier to work with us and book in.
This episode was sponsored by Avamore Capital. In property finance, you want specialists who understand development, refurbishment, part completed projects, and bridging deals inside out. Avamore Capital knows construction timelines, cost pressures, and what it takes to structure deals through market changes. Deep expertise, not surface knowledge. Solutions-led thinking based on what actually happens on site. When you're working with Avamore, you're working with people who get it. Learn more at avamorecapital.com. In terms of the lender clients you are working with, what are some of the themes that they're talking about 2026? I'll start with you, Ellen. What would be the thing that you're sort of picking out amongst all the other things? Like what are they telling you in terms of their things that they're excited about, the things that they are worried about?
I think really for me at the moment is they're going in and they're always questioning what other people are doing with their marketing. So there's a lot of people upping their game. So I think that is a big thing where they want to do something that's different. Everyone wants to be able to stand out. And that's whether they're doing a new launch on something or whatever that may be. They're conscious now that, especially when they're coming in as a premium partner, that they're getting the most out of what they're doing. And I think, that is probably the biggest thing. I mean, we've had people start doing different marketing with us in the sense of new magazine ads, different types of ad. For example, in our latest issue, we had HDB, for instance. They did a gatefold ad. It's things like this where the people want to up their game. They want to do something so different. I think that's a big thing at the moment. That's something I've noticed that I think going into next year is going to be a big thing.
Mm-hmm.
What about you, Beth? What are the themes that you're seeing? Maybe less so from a marketing perspective, but generally more like at product level, or areas, directions that lenders are wanting to really push particular campaigns and themes.
I've had a lot of clients say that they want to double their lending from this year to next year. Obviously, that's kind of a normal.
Yeah, me too. Thank you.
But like a very much like, no, this is what we want to do. This is what our targets are next year. So they're having to put a lot more marketing in, a lot more exposure in, and asking for our help with that. So that's been a big one. Commercial mortgages, huge market.
Yeah, semi-commercial. That seems to be like a huge thing, right?
It's massive for so many lenders, not just our clients, but just so many lenders in the market. We have a lot of launches coming up. A lot of product updates, a lot of new entrants into that space. So that's big. Finding new niches, because the residential market's
it's challenging.
Busy and it's challenging. So that's obviously why people are moving into those areas, but they're also seeing other huge lenders entering into commercial mortgages. So it's like, do we take that leap and be one of the many in that space? That's probably going to happen over the year, or do we look at something even more niche? So we have had some conversations with clients that are looking at very tertiary kind of areas of the specialist lending market.
We've obviously known each other a long time, pretty much as long as we've been going as a business. So you've seen as much of the market as I have, if not more. Are there any things that you're looking at, directions that people are going in, going, why? It's like, I've seen other lenders do that and that's not worked. Like, are there any particular kind of pitfalls you're now spotting, and you're going, oh no, don't do that? I mean, I understand, like from a marketing perspective, you're happy to take the money, right? That's what they want to do. But are you looking at, we've seen specialist lenders turning into banks. It's not worked out very well. We've seen specialist lenders latterly trying to become buy-to-let lenders. Now you've got people going into commercial. Are there sometimes you look and go, look, you're really good at this. Just try and do more of this, rather than like you're about to get distracted. So I know of one beloved bridge lender that's moved into buy-to-let, and I have brokers telling me, look, they've lost their way. They've completely lost their way on the bridging space, because they're kind of chasing the buy-to-let because they think that's where they're going to get their unicorn status or whatever. Do you see that in the lenders that come to you and go, I really want to go and pursue this new product line, and you're like, cool, I'll take your money, but this is going to not end well?
Yeah, I mean, it really depends on that initial conversation of this is what we plan to do and this is how we're doing it and this is where we're going to differentiate in the market. If I feel like I've kind of heard that before, I will tell them that. I'll say, look, I don't know where you're going to sit in, and normally my face doesn't lie, so I'll normally like just kind of be like, okay. So yeah, it's not really about just taking money off people. And also like with the new model we've got, that's not what we're doing at all. We're not taking any more marketing. So we're very honest with that. It's only if someone comes to us with something completely new we've never seen or never written about, we're like, okay, you've got a point there. There's no one doing that. But it's interesting what you say about buy-to-let. You know, it's been a bit of a pause over the last 18 months, and some people had buy-to-let and then kind of paused it. I definitely feel that there's a resurgence of that. There's going to be more coming back in the market, and there is that fine line of, do we maintain the service and the product offering we have on the bridging side if we're having that? Because you have to, for buy-to-let, you have to bring in a much bigger team. And it's a much, you know, it's different in terms of servicing, and it's a longer game. So it depends on whether or not they can keep them separate and make sure that the bridging team can still do and deliver what they've always said that they've done. Yeah. But it's difficult.
Yeah, I think, you know, we have had, you know, some clients that we've spoken to, and they say all of a sudden, you know, halfway through the year, they say, oh, we're going to launch this. And it's kind of a bit like, oh, that might come across as a bit of an afterthought. So we give our input, definitely. But yeah, I mean, as you say, the market's ever changing. People are always wanting to try new things and do different things. And so that's where we kind of have to be honest. And that's Beth and I are very honest people. So we've got nothing to lose really, other than, you know, we want it to work for you and want it to work for us. And that's, we do see it.
Yeah, if someone says, oh, you know, we've got this new product offering and it's giving great, we've got really good rates and we're really fast, I'll say like, and so unique. we have these conversations quite a lot like that, and we'll dig into it, and normally it's something which they've got which they didn't even realize that actually is a USP, and like, actually no, it's that's really good that you do that, because I don't hear many people shouting about that. So there's kind of those little things, and it's always about the brokers, what the broker cares, what the broker thinks. And we hear, you know, we talk to brokers every day. We're always seeing brokers. We're always on the phone to brokers, and, you know, they're our readership. So we know what they're interested in. So that is really useful information, because if someone says, oh, we brought this new product to market and we think this is going to be really good, I'll say, well, actually no broker I've spoken to actually wants that. They've never talked about this as being a challenge. So you're going to really find it difficult to compete in that market, because they clearly have that part of the market sewn up with lenders that they already use. And it's really difficult to gain trust in this industry when there's so many lenders. Why would a broker use a brand new lender they've never used before, when, you know, they're using 10, 15 lenders that, you know, cover all areas of the market that they focus on?
Yeah, I mean, that point around trust is absolutely crucial. And it took me, you know, I'm a bear of little brain, so it took me a while to work out that trust piece. It was like, what do you mean we're like 0.05 a month cheaper? Why would you use us? Like, well, because they've performed for me 100 times and I've never dealt with you, so go figure. And, you know, I think eventually you kind of work it out. You know, you work it out, you go, okay, fine. And you have to it's a bit like brokers gain new clients because other brokers let them down. Lenders gain new brokers because other lenders let that broker down. So you kind of have to wait, or it's either the broker's been let down, or you're offering something completely new or different. The trouble is, when you're offering something new or different, it generally tends to lead to credit problems down the track, because you're it's because how do you really innovate in our space? It's
difficult.
Like it's quite difficult. So I do get that. I mean, look, for our part, we're, you know, without, you know, plugging Avamore for a quick second, obviously we're also looking to massively grow our lending activity as much as the rest of the market. I think the difference that we're looking at is that we think that we still believe that the sort of the development heavy refurb space, you know, and that I suppose includes Part Complete as well, it still remains heavily underserved, particularly smaller developments, sort of $1 million, $1.5 million GDVs, for example. There's not enough lenders that are actively supporting that. But at the moment, those sites remain viable. And, you know, if you have a 50K crossover run, you know, it's a couple of credit cards. It's not, you know, it's something a developer can patch up. Whereas I think a lot of the other development lenders that's still active like, you know, much larger tickets, and it means that those deals are much more susceptible to kind of not being able to get over the first hurdle or falling down midway through the project. So, you know, I think there are many ways of skinning the cat. You can chase. I think if you don't want to go into development, for me that feels like there's a big open goal there that a lot of people a lot of it's driven by institutional funding.
Yeah,
they
want the money back.
The institutional funders don't have the appetite for development at the moment, in the current point in the cycle. Thankfully, you know, we've kind of got the scars and the grazes from 10 years of doing it. So our funders continue to trust us in that space. But I think fundamentally, like, we don't, you can grow without having to necessarily kind of pursue new avenue, new kind of weird and wonderful avenues, or try to go to a really congested marketplace. Like, look, I get it. The buy-to-let marketplace is huge. The regulated space is huge. However, it
comes with a lot of, it can come with a lot of issues.
Yeah, it's not a free lunch. And if anything, like, the amount of cost that you have to throw at that to get, to increase your overall lending volumes. And there's a very successful what was originally a bridging company, then became a development company, then moved into regulated mortgages. And I spoke to one of the founders, and he said, I wish we'd just stayed with a bridging development lender. Because at the end of the day, like, for the additional arsake and cost, you may as well, like, how much more money did it actually make you as a business? So
it depends on the long-term aim of these lenders, because a lot of the longer-term products are for a potential exit. That's what it is, because then otherwise you're selling a very short-term loan book.
Well, the irony is that this particular lender, that doesn't apply. I won't say it on camera because I don't want to embarrass them, but they could, their exit's probably a little bit more flexible, shall we say. But I completely get the point there, which is that the model, again, we operate on a slightly different model because we're balance sheet light, but the model, if you're effectively selling yourself at 2x book value, and you just want to grow this enormous book, and the best way to, and the best way to get an enormous book is to go and do, billions of buy-to-let mortgages. Okay, fine, but you've got to, it's not a free lunch. It costs a lot of money to originate it. You've got to service it. You've got to maintain it, and you also need to, you have to start getting some of that money back as well at some point as well. So,
and you're competing with a lot of people who are in that space because they're seeing it as an opportunity.
It's cutthroat. I mean, just speaking about that, favorite topic of mine. It's it's effectively M&A in the lender space. Have there been many kind of whispers as far as you guys are concerned around it? Does anyone kind of talk to you and go, have you heard anyone who's looking to sell up?
Yeah. Yeah, often.
That's interesting.
Lenders who are looking to buy, looking to buy books, or looking to buy divisions, like if they've got regulation or whatever it is. Yeah, definitely. And also those that are gearing up for sale. Yeah, we hear that quite a bit.
Yeah.
Is that something that you think 2026 we're going to see more of it? Like, obviously, probably the most notable one, two notable ones last year. Obviously, we had Tuscan being acquired by Alica, and then we had Catalyst. Catalyst being acquired by FHL. I mean, do we think more of the same? More, or do you think it's going to be even more active? How do we think it's going to play out?
I think it would be similar, if not more. Yeah. But I've said this for the last 4 years.
I feel like I've been saying the same thing for but at some point it's got to happen.
It has to happen. It has to happen. Either they go pop, or they need some sort of M&A.
Yeah.
Then it needs to happen. And in some areas where I'm just like, I don't know how that's profitable.
Yeah.
So that it does need to happen. It's such a competitive market, and it's great. And everyone always says that competition's great, and it is great. It's great for the end user, but margins are so tight. Especially on banks at the moment.
But is that about to change? Because the recent changes to capital rules.
Yeah.
And I think I saw the I'm not going to name them, but the CEO of a large challenger bank was basically kind of very much intimating that they were going to start going on a bit of a acquisition spree, because all of a sudden their cost of capital's just got cheaper, which means that they can go and acquire businesses and start to really grow.
Yeah.
So I don't know. What do you think about that?
There's movement there. There's definitely, but
those some of the people that that kind of saying to you, do you know who's out there, who's looking?
No,
Okay.
actually non-banks.
Non-bank.
Yeah.
What? So like what? So specialist lenders themselves looking to buy other specialist lenders.
Yeah.
That's really interesting.
Yeah, especially, you know, with institutional funding as well, a lot of these lenders need a long track record or
Yeah.
a large book, and some of them would want to kind of speed up that process.
Yes.
So that happens if they've got, you know, good equity and they can facilitate that, then they will. So there's a range of reasons why they would do that. But there's a difference between I have an interest in doing that and whether or not it actually happened. Because a lot of this, you know, behind the scenes, people look at, and I've spoken to many lenders that are like, I've looked at that business and I was interested, but then this came, I saw this and no longer interested. So it's quite I think, you know, there's been some lenders who've been on sale for quite a long time.
Well, I know of one South Coast lender that's been on sale for at least the last 3 years, 4 years even, coming into this year. So yeah, I think there's definitely certain owners who would be open to, or would more than open. You know, they're sort of practically, you know, gonna get it here sign, haven't they?
Yeah.
But no, I think that's quite. I think it's quite interesting. What do you think the specialist finance space is going to look like? You know, say 4 or 5 years from now, 2030, 2031. Like, you know, you've seen a huge evolution so far. I mean, if we think that the M&A will happen, I mean, I know. Look, one of the things that so Stuart Hicks from City and Capital Recruiter, he also has an M&A advisory business. A lot of my audience will have heard me talk about this before, and obviously I interviewed him as well. He said, and I'm really curious to hear what you think about this, because obviously you're talking to my peer group day in, day out. He said one of the issues around a lack of M&A in the specialist finance space is that all of the founders or the owners are kind of like my age, you know, early 40s, and they're not really ready to hang up the boots. We've seen it maybe more in the brokerage side where, you know, where people are in their early 50s, they're kind of like, okay, cool, now, you know, I'll get a few mil, do my workout, I'll do my earn out, and then I'm pissing off to Spain, right? Cool. You know, just the demographic profile for most of the lenders is, you know, kind of 7 to 10 years younger. But, you know, I guess if we look 4 or 5 years from now, most of us are not in our early 40s, we're in our late 40s, right? So what do you think the specialist finance market looks like then in that time? Are we going to be looking at a more consolidated industry, an even more professional, even more institutional industry, or a new entrance is going to keep flooding into the market as they have been?
I think what will happen, and this is obviously very kind of pie in the sky sort of thinking, but I think if there is more M&A, which I think has to happen, it will create it will create fewer and larger lenders, a lot of them bank backed, or, you know, so there'll be more of those, more mergers between those, or acquisitions, and therefore they'll be able to corner the very mainstream vanilla bridging side of the market, and there'll be less to choose from. It'll actually be easier for brokers to conduct business in that part of the market. But what I think is what will come full circle, because let's say like 12, 13 years ago, the majority of the market was privately funded.
Yeah.
It's now kind of moved, you know, 12 years on, most of the market's institutionally funded.
Correct.
And there's not that many private lenders. And actually brokers love a privately funded lender. They love going to a principal lender that can make their own decisions. They can call, you know, the 5 people within the team. They all can, you know, they all can give credit back decisions. And that to them is gold dust in this market, because everyone's gone institutional. Great for rates, great for end customer, and there's a place in the market for that. But the privately funded lenders, you know, they're all trying to scale up and offer bigger product, you know, more diversification, and they're now no longer in that very niche part of the market. So I think we'll go full circle where we'll have less lenders in the institutional funded space, and they'll be much bigger, and they'll be competing with, like, you know, the larger banks, and, you know, they'll get more interest from those larger mainstream banks that don't actually want to offer bridging, and then you'll have like this flurry of new private lenders that are offering things that are very bespoke, because there'll be a space in the market for them. That's what I think, but
Yeah, I don't disagree with that. I think the inspiration I always take is from the surveying world where I started my career. And when I started in, it makes me sound ancient now, but 2004, joined top 3 in the world surveying practice, which effectively was already a merger of one of the largest UK or European surveying practices or commercial agencies with one of the largest US ones. And CBRE had just merged with it was Hillier Parker, they become CBRE, we came from Wakefield. Jones Lang Wooten became JLL, and then all of a sudden, but when I was applying for these jobs, there was a good dozen medium-sized surveying practices, and then eventually they just all went. But then so what you ended up with is really large. You had a kind of half a dozen like very dominant surveying practices or commercial agencies, and then you had lots of niche agencies, effectively, which served the purpose. I think we're going to. And you could probably point to lots of other industries where the same thing happens. I think that's probably where we're going to end up. Where we have, is it 6 or is it 12? But I think we'd probably end up with we'd say the bridging space is 6 billion a year. You throw the development in there, another sort of 18, 19 million, so it's got 25 billion spread across. You say 80% of that gets spread across a dozen to 15 lenders, and then everyone else gets the dregs. It's I think that's kind of how it's gonna. That feels to me how logically it'll play out. But there's one thing we haven't actually talked about, which is the impact of tech. Like, how do we think that the impact of tech is going to play out? Because what's your read on that?
It's going to massively change things. I mean, that's why we're doing this huge rebrand of the website. So it's not just the look and feel of it.
Yeah.
It's not just the banners, not just who we're working with, who we're not working with. It's very much we're utilizing AI.
Yeah.
We're creating our own AI system that we're training at the moment, because that's where it's going.
Yeah.
You can you say no.
AI is going to write the articles for you? Or
No. It's more live trend reports.
Right, okay.
Also related news stories, trending news stories, updating things.
Okay.
Kind of, it's all going to be automated. So, if a broker's on an article and they're reading about you guys, they'll automatically be related stories about what you've done recently. They'll be like on YouTube where you've got the automated next video will be like that for next article. It's just a lot more. Our editors at the moment, they're looking at things on a weekly basis in terms of trend reports. It doesn't now be to the minute, real time. So it means that we've got a lot more under our belt to what we want to actually, how we can produce more content and better content for our readers.
Yeah, I mean, we're running with AI. We know that that's where everything is going. And it's the same in media, it's the same in lending. Everything needs to go towards that side. And people are scared of it. People are really scared that AI is going to take our jobs. But it's not. It's really not. It's going to enhance our jobs. And I think that the more we lean into it, the better it will be for everybody. We've met with lots of different people that think that underwriting and everything is going to be gone because of AI. I really don't believe that is the case. I just think it's massively prevalent at the moment. We need to run with it, and that's why we are doing what we need to do, because it's there. SEO, all of that will be gone.
Well, I was going to ask you about it, because I think SEO. SEO is going to how you search for things is you both can tell me how do you search for things now, right?
Yeah. Within the next year, people aren't going to be using typical search engines. It's all going to be through AI, so Gemini or ChatGPT or whatever else people will be using mainly. That's where it is. That's AIO is where all the focus needs to be on. If people haven't already, that's where they need to be at. SEO still plays a part. It plays a part in AIO, so that still needs to be there, but it's not the prevalent. It's not what you should be looking at metric wise. And it's all about making sure that you have the authority of voice. And if you've been around in the market for a long time and you are the go-to, let's say, publisher for bridging finance or specialist finance, that will be what is picked up. So that's huge. That's massive what people need to be doing, focusing on over the next year. I think LinkedIn, we use LinkedIn a lot because we know that's where obviously all the industry what the industry uses. But I think there is going to be a tipping point. Are people going to start getting turned off by LinkedIn because there are a lot of humble brags on there? So there's things like that. It's like, well, what's next? It's always looking at the next opportunity and next thing, like not putting all your, everything in one basket.
Yeah. I mean, I think because this is something I wanted to bring up with you is that you know, and it sounds like you kind of picked it up, which is that the role that you guys as a kind of preeminent trade press will have in helping, in effectively helping sort through who's the pre-qualified lender that your LLM is going to spit out if you go if you're Joe Bloggs and you're looking for a bridge or a buy-to-let or a development loan or whatever, you go, right, I need a development loan. This is the project, blah, blah, blah. It's going to go right, and it's going to and it's going to cite you guys as a credible journalistic source for. I mean, I've done some searches already about things, and you guys come up as a citation already. So
it's the same with the lender index.
Yeah.
That's that needs to be coming up for every type of broker request on an LLM about what lender to go to, because it will pull that product information and pull what they do and their specialism. So it's so important.
Do you think lenders in particular, I mean, it's the same for brokers as well, but because it's the same issue essentially, but do you think lenders or brokers fully grasped the importance of effectively not being LLM search optimized? Because I think ultimately, like, the tech is advancing so quickly that I think the experiences that people have with lenders in particular, like even something that is a bit more heterogeneous, like development finance, increasingly will become. One lender's service will become indistinguishable from another's. So do people really understand? People really fully appreciated how important brand is going to be, over the next 5 years?
Not everyone. I think especially with the partners we're speaking to, yes, because they get it and they understand. We've had very similar conversations, so yes. But I think there's a fair few that don't understand how important that's going to be moving forward. People are still taking Google ads and they're still doing this, and it's like that will work to an extent, but there's so much more out there which everyone needs to be behind. I worry if people are going to be behind because they haven't picked up on it now, and they should have picked up on it 6 months, 12 months ago. Yeah,
but I mean, how do you separate how are you advising people in terms of separation between personal brand and corporate brand? Because I guess people are more inclined to connect with the personal brand. So, like, what's the advice and feedback you're giving? Obviously, without giving away the secret sauce. But
I mean, even with our Solus emails, which we're looking at the moment, like marketing campaigns, the top 10 of the year in terms of opens and clicks, like what worked the best, and a lot of it is very personal.
It is, and
like people moves and that kind of thing.
Not necessarily. No. It's more about what they stand for as a business, what the team stands for, rather than this is our product. Yeah,
and I think that's part of it, is that we get to know everybody within the company, right? At a personal level, we get to know you and we become friends essentially with the people that we're working with, and we get an understanding of where they want the brand to be, and then we come up with how we can pull personalities out from the business into an advert and to make that brand that personality, because that's what brokers want. They want the personality side of things, and I think that's huge, really.
I mean, I guess the most, I think, we mentioned Hampshire Trust already, but I think they probably did it most successfully with Alex Upton a few years ago. Like, I think that was a very effective, she became a very recognisable face for that brand. I'm actually surprised we haven't seen more of that from other lenders, really. I think that's...
You know what? I think it's sometimes I find it it's a difficult conversation. For example, the power list for the Jan-Feb issue of the magazine, like people are really excited because everyone wants to be in the power list. We're focusing on underwriters for next year. And some of the kickback we're getting from the odd lender is, well, I don't want to promote my underwriter because then they'll get nicked by someone else. That is, to me, I get it. I understand that. But that is a tough conversation to have. And like, I always try and steer it on the way with, but this is great brand awareness for you guys because you've managed to retain someone who's brilliant and does such a good job. And, you know, if they wanted to say that, they'd say that. So that's, I
think
find
that sounds like an admission that they're not paying that individual what they're worth, really. No,
potentially.
But well, that's maybe a lazy assumption. But
Yeah.
it's quite an easy one to get to.
But
right?
yeah, that happens quite a bit, and I think that's why people don't like to put the face of the brand out there, because especially BDMs, and we're seeing a lot of relationship managers, BDMs, kind of moving around the market. That happens often. But if you're putting them as the face of the business and you're putting all your marketing efforts into them, because they're, you know, your key origination channel, what happens when they leave? Do you have a brand left? I get it.
Well, yeah, but I mean, I guess, well, the flip side, you know, if you have too much of the brand, you know, like for example, if you have too much of the brand tied up in the founders, like in our case, like operationally day to day, like I don't really do a lot. I don't look at that many individual loans. You know, maintain a few relationships. I do a bit of this. But you know, that if too much of the brand is tied up in one individual, if that individual ever wants to exit the business, right? You know, I don't plan on leaving Avamore feet first, right? At some point, I've got to exit the business. You know, like if you have too much of the brand tied up in one individual, you know, it's like, well, again, it's the same. You've got to spread. You have to have
the whole team.
Absolutely.
Yeah. So you have to have a full team, and we always say that, you know, it's the trust and relationships. That's what the industry is built on, and so 100%. Brokers need to know who they're going to be speaking to, and that there's a personality and there's a person behind it. It's not just, we're a great brand and this is what we do. And brokers aren't going to be like instantly like, oh, I can't wait to speak to them. They're going to be like, oh, I want to speak to that person or that particular person because I've seen them at this event, and I've read what they've said about this specific part of the market, and it hit home for me, and I want to talk to them. So those are the things where there needs to be more emphasis. But I think there is sometimes some hesitancy. But like you said, having the whole team there, like the faces of the brand, that needs to come out in their marketing, definitely.
Yeah,
doesn't always be the case, and I, you're right. I'm sometimes quite surprised when some teams aren't promoted, you know, massively for a brand.
Yeah, it's a tricky conundrum. But at the end of the day, you've got to find a way of distributing the personalities in your business, but you also want to make sure that you're giving it the right people enough coverage. But I get your point around departures, I guess. But then that's incumbent on the business owners, the business management, to make sure that people are properly looked after, that they want, that they're, you know, that they're motivated and they want to stay.
Of course.
Exactly.
You know. So I guess we're sort of winding down now, but just how's the relocation to Guildford gone? Is that gone well? Have you found the right cocktail spots for the team?
Always.
We're finding them.
For bonding.
Ongoing.
Many spots.
Yeah.
It's good. We really love it there because it's nice because we can have, you know, our team, and it's beautiful office, massive office, and we've got everything.
Surrey air.
Yeah, it's got the Surrey Hills behind us, got a lovely town, got everything we need, and then we pop on the train half an hour in London,
you're in London, seeing all your clients, having tinnies and chats. So,
Usually a little bit more classy than this, I'm not going to lie.
I'm good. But that's really good. But you kind of happy you made the move now, and
so happy,
feeling quite settled and stuff like that. That's great.
I mean, it feels like we've been there for ages. We've only been there since, you know, April last year, so it's been amazing, like really, really lovely. And yeah, I can't wait to we're going to be building another kind of area for for us inside the office. So yeah, more kind of a little bit of renovation.
Lovely. Well, but it sounds like it's been a good move. And Beth, Ellen, it's been an absolute pleasure to see you as always. Thanks for coming on. Thanks for sharing your plans for next year. And yeah, let's see. Let's maybe catch up with a follow-up episode at the back end of 26 when we can see how much we got wrong.
The roundup of the year.
Yeah,
We'll buy some more tinnies.
Yeah, more tinnies, please. Yeah. Maybe we need another couple more in you before you come and join us as well.
Yeah.
To make it really, really raucous. Yeah.
Yeah.
But
Careful what you wish for.
You've been impressively restrained.
Thank you.
I've been on my best behaviour.
You've been on very good behaviour, I have to say.
Trust me, I got a talking to beforehand.
Did you?
So it's fine.
Okay.
Wasn't from me, I don't know.
No. Is that Davina?
From myself. Yeah, Davina.
Oh, right. Anyway, thank you so much, guys.
Thank you so
much.
And we'll talk to you again in the next one. Thank you very much. Thank you very much to producer Davina Patel for producing the episode. Thanks to Avamore Capital for sponsoring the episode. Thanks to Philippe for the technical work. I've been your host, Michael Dean. You can find me on the internet at property_funder, and we'll talk to you again on the next one. Thank you and bye-bye.